Jim, we should start with the other Jim, Bullard, who made some headlines on Squawk Box. He was certainly more hawkish than maybe the market wanted to hear.
Yes, I mean, look, James has been infinitely more dovish in the sense that he really wanted the economy to come back, and like Jay Powell wants to get as many people employed as possible. But I think he pretty much said that a lot of what our job is pretty much done when it comes to buying bonds. And he did kind of just say one of those things where I think people said, yeah, why is the Fed still buying mortgage bonds? That makes sense. He made common sense. The only thing that he didn't do was acknowledge that the commodities, which everyone was really worried about on Tuesday, have completely collapsed.
Oh, my gosh.
It's stunning. A lot of commodities are now down for the year.
Look at the declines. You know, palladium, I mean, these numbers have fluctuated, too, and they've been volatile. So they may not be the most accurate, but it certainly gives you a picture. Palladium down 11%, platinum 7%, corn 6%, copper 5%, oil 1%, soybeans 12%, lumber 11%. I mean, if that gold, the worst week in 15 months.
So, I mean, look what they've accomplished without raising anything. A 1-2 punch of Powell saying, don't worry, we're going to have to pull them forward a little. But if we get another outbreak or if things slow at all, then we're cool. And then you send Bullard out, and maybe it's totally uncoordinated, but it seems coincidental. And Bullard says, look, we're going to be doing some tapering, obviously, because things are good.
You want to listen to Bullard real quick? Let's listen to Bullard and we can talk.
Yeah,
let's listen to Bullard. Yeah. No, it's all right. Let's listen, and we'll come back and chat.
Of course I want to hear Bullard.
We were expecting a good year, a good reopening, but this is a bigger year than we were expecting, more inflation than we were expecting. And I think it's natural that we've tilted a little bit more hawkish here to contain inflationary pressures.
You know, the other thing he said was, at least in his mind, he sees the first rate hike, Jim, coming at the end of 2022.
Right,
that unsettles some people to hear that because it's a little earlier than some had hoped or thought.
He is saying a lot of what people thought Powell would say, but this 1-2 punch has pretty much done the job, I think. I think we're going to look back at today, maybe Monday, Tuesday, as watershed days where the Fed did what it's supposed to do. It actually literally talked things down, and interest rates are down big. But I also think, as our colleague Steve Leisman this morning tweeted.
That's right. Thank you for the segue there, because Leisman did tweet this morning, quote, from where I'm sitting, Powell has managed not just to avoid a taper tantrum, but found taper tranquility. True, he's not tapering just yet, but they're talking about it, and bonds are rallying. That's already better than in 2013, he said. And while I'm betting the Fed is, quote, not displeased to see some froth, Jim, come out of stocks, someone is going to notice soon that lower bond yields argue for higher stock values. Leisman makes a lot of sense there.
The critical part there is from where I'm sitting, because we don't know. But what I liked about what Steve said is, once again, you go and you do this talk like Jay Powell did, and, the 40 people raise, hey, don't you have to do it? And he says, no. I mean, we'll do it. Looks like 2023. You send Bullard out, and Bullard, who's a noted, I'd say, dove, and a very thoughtful man. Obviously, 6 years ago, I had quite a tiff with him. But
that's right.
Bygones be bygones, right? And even if I'm from Philly, and I just think that they've accomplished a lot of what they've wanted. They do have to raise the value. I mean, look, everyone knows the economy's pretty good, but Jay Powell's been saying, can we get minority employment? Can we get Hispanic employment? Can we get African American employment better or go back to what it was in 2019? But they're doing the job. And I think it's rather amazing how smart they are. They're doing it so intelligently. They're getting it done without making it so that we're suddenly like in 2015 when Janet Yellen did hey, obviously the economy's really strong. Let's start the rate hikes, boom. And then, of course, oil collapses and she didn't do as good a job. We have to grade these Fed chiefs. We can say that they did a good job or not. I mean, that's no different from saying that certain coaches we know did a good job or not. And I think they're doing a great job. I don't think you should buy here because we're seasonally. This is it. This is 22 out of 22 times, as my friend Larry Williams has said. These days have been down. So
today and Monday. I mean, when you were asked by Andrew in the last hour, what would you buy here? You were emphatic. Nothing. You said.
No, I mean, look, it was a 1-2 punch. First of all, he asked me, what would you buy here? Second, he has the guts to come out for the Hawks. A needless and gratuitous slap at me. And I do think, well, which, by the way, he's probably going to be right. But I definitely feel that the numbers say Today and Monday are weak, and then the next 4 or 5 days are weak, and then you have a great trade. So let it come in. That's what they're telling you. Look, guys, we're trying to get the froth out. Acknowledge that. Now, they did everything but say that AMC and GME should be down. Can you imagine that if Bullard, they put out someone on
the meme stocks?
Yeah, they said, listen, the meme stocks, we've had enough. Or Adam Aaron comes out and says, you know what, I got to do 500 million shares here because this is game on. Or Ryan Cohen comes on. Now, he is the putative CEO, but not really, of GameStop and says, look, we're going to open up a crypto bank in 4,000 different stores. He refrained from doing that because he didn't want to be right on top of when I've said it, which would give me too much credit.
Shepard Smith here. Thanks for watching CNBC on YouTube.